Hello, everybody. Welcome to Talk About Houses. I am Todd.
I'm Oana.
Okay, we are going to do the Realtor.com 2025 housing forecast. It's their forecast, not ours.
Woohoo!
There's a bunch of data, some charts, and what we've got is a bunch of individual cities and their projections for home prices in those cities. I will tell you right now that one of the cities is projected 12.3% price appreciation.
Woo.
We're going to wait till later on to tell you which city is. We're going to show you a bunch of the cities that we've kind of been talking about for the last...
Can I give him a hint?
No.
Hint?
Hint. Give me a hint.
It's not San Francisco.
It's not San Francisco. It's not New York either. Okay. So what we'll do is we'll start some charts, and we've got some other data, and then we'll go through all that, and then we'll sort of analyze and talk about it. Okay. First thing we're going to start is with the chart. Now, I hate this chart because it's a year-over-year chart. So you're going to learn something about it. We're going to have the lesson on year-over-year charts. This is not that dark line is not the prices from 2023 to 2025. That's the year-over-year increase from the previous year. So anything above the zero, that bottom line, means prices went up year-over-year that month. So the red bar is sale price in thousands. So what's predicting here is it would be more homes sold 2025 by probably about 5 or 6% than last year.
Yeah, I think monkeys flinging things would have the same prediction. I mean, you have to have more transactions in 2025 than you had in 2024 because we haven't had any.
Very few. And then the other line, that dark line, is year-over-year percent of the median sales price. And then the forecast, which also shows home prices nationally going up about 4% year-over-year from 2024, from this year, okay? All right, move on to now a better chart, like this chart. This is a more reasonable chart. Okay, this is the housing affordability forecast. It's based on percent of income spent on a home purchase. Now, the chart's a little misleading. First of all, it doesn't start at 0, it starts at 2%, and 100 would be way off the chart. If you took this chart and zoomed out, it wouldn't look like it moved a lot. So basically what it shows is, as a percentage of income, that from 2001 to 2025, we right now have the highest percentage of 2022, 23, and 24. Highest percentage of income spent on a home purchase. However, home prices went up all of those years, 2022, 3, and 4. So why is it with if you're buying a house 100%, no down payment, you're just buying it 100% loan. Why are home prices going up when this percent of income number is higher?
So a couple of reasons. One, people can clearly afford it, because if they couldn't, then that wouldn't be happening.
Okay.
But more importantly, I think it's because we simply don't have enough homes to meet the demand. And this is a drum that we've been beating for a long time. So long as we have insufficient inventory for the amount of people that would like to purchase, and people can still afford homes, you're going to see this sort of thing continue. Okay.
This chart actually is wrong, and I'm going to explain why. Okay. What it's showing on this chart is that if you bought a house, you spent 30% of your income to buy the house. That's what it's saying, 30%. But that's not what this is. What this is if you took the whole country and the average person, it would take 30% of their income to buy a house. These weren't the people that bought houses. This is all people. What's happening is you have the bottom, probably third or half of the market aren't buying anything. It's the people who make above median income that are buying these homes. So above median income are buying homes. So their incomes are much higher. So it's 30% for average people, but the people actually buying the houses, it's much less. And we've seen this. People, we've represented people that make, mid 6 figures. They were airline pilots or people like that. But they're not buying a $5 million house. They're buying a $400,000, $500,000, $600,000 house. And their payment is 10% of their income every month.
Right.
It's substantial. But anyway, this is interesting. It does show it improving, probably because it does project interest rates to go down a little. With that, here's the mortgage rate forecast. Also, oddly, you can see interest rates bounce around. They've trended lower. If you look at that from 2023, peak of 7.6, right now they're in the 6s. and this thing has got it trending into the low sixes. This is a complete guess, but what things do you think they're looking at that they're saying they think they'll be maybe not have high interest rates?
So they're looking at the economy in general, they're looking at unemployment, they're looking at the entire policy shift at the federal level, and all of these are probably going to work together to help lower interest rates. Now remember, the Fed funds rate is not the mortgage interest rate, but the mortgage interest rate and the Fed funds rate are kind of loosely related.
They're loosely related, yeah.
Yes.
Okay.
So the thing I want to say about that a little bit, which is sort of kind of a sidebar. So I like tracking interest rates because I'm boring, and I track them every day. So every morning I wake up and I get a little text message from a lender who sends me today's interest rates, and this is every day. So every morning the first thing I do is I look at these interest rates. And so I've been watching this, and they've been doing this kind of fun thing for the last, I would say, maybe a couple of weeks, where, like, for example, it'll go up 1/100th of a point, then the next day it'll go down 1/100th of a point, then down 1/100th of a point, up 1/100th of a point, down 1/100th of a point, down 1/100th of a point.
Yeah.
So I've seen this kind of one step forward, two steps back kind of thing with the interest rates for the last couple of weeks, and they've gone down almost 1/2 point really in the last month. And you may not think that 1/2 point is a lot, but it really is a lot, because when you're talking about maybe borrowing $500,000, 1/2 point of interest is actually quite a bit. So so I'm seeing this pattern. Now, whether this pattern will continue to the new year, I don't know for a fact. Nobody does, but most likely it will. So most likely what we're going to see is this kind of slow progression of interest rates declining over the next maybe 18 months, and then maybe kind of a leveling off. And I think we'll see maybe interest rates go down and maybe level off for a little bit, and then go down and level off for a little bit. So it's going to be kind of this stepped approach, this kind of terraced approach to interest rates going down for the next 18 months. Where they're going to finish, nobody knows, right? We don't know when the music stops. But, the smart money says that they're going to finish somewhere in the neighborhood of 5.5% to 6%.
Okay. So we're going to go through some of the comments from the article, and then we're going to go through the individual cities.
Okay.
You'll be surprised to find which cities expecting the highest in the nation, 12.3%. Okay, what will the market be like for home buyers, especially first-time home buyers? I'll read this, and then we'll talk about it.
Okay.
Home buyers hoping for a lasting return of September's near 6% mortgage rates will likely be disappointed. We still expect the long-run trend in rates to be downward as the fight against pandemic-induced inflation comes to an end. But we're starting to a much higher current level that positions rates to track towards 6.5% by the end of 2025. There will be volatility around this average, so shoppers may catch a lucky break, but our advice is to plan a budget for the mid 6% range. Okay, first of all, Oana, if you got a 15% loan, 15-year fixed, it would be much lower percent, probably like 0.75% less. So it'd be 5 something.
Yeah.
Like 3/4. If you bought a 15-year fixed loan now, if that's what you originated, you're already in the 5s.
Right.
Same with some of the VA products are in the high 5s right now.
Right.
Okay. Right. So the problem is, if interest rates drop substantially, this incentivizes more people to come in to buy.
Right. So the problem with that, of course, is, again, supply and demand. We don't have enough supply to meet the demand. So we already don't have that. So more people jumping into the home buying market isn't helping buyers. It's helping sellers, but it's not helping buyers.
Okay, here's the next one. What will the market be like for home sellers? Limited inventory and strong demand in many areas could mean that sellers still have the upper hand in terms of negotiating prices, especially in desirable locations. However, higher interest rates or slower than expected income growth could lead to fewer buyers being able to afford homes, which might result in longer selling times or price reductions in some markets. As noted above, the market shifting from a strong seller's market to one in which buyers and sellers have more balanced market power. Nationally, about 20% of all homes that were listed had a price reduction, but that meant that 80% didn't.
Right.
And that a lot of those 20% we've seen, they're just overpriced houses.
Okay, so you kind of have two groups, right? You have people who price their home at market value, and you have people who go fishing. And that's okay. People can go fishing, but people who go fishing find out that there's generally not much appetite for overpriced homes. So those homes will sit there until the sellers get more realistic or until buyers get brave and make offers on those overpriced homes that are market value offers. And if a seller gets enough market value offers, then at some point they may bend. I think that the thing to keep in mind is that if we continue to have low inventory of homes to purchase, then sellers will actually be less likely to sell as well, because they've got this whole thing where they've got to sell this and go somewhere else. And if they can't find something to buy somewhere else, then they're not going to sell this. So it's kind of a chicken and the egg thing.
Yeah, they can't move. Okay, here's the last one, and then we'll go into the individual cities. How can home buyers prepare? Well, buyers will have more time to make purchase decisions in many cases in 2025. In any market, a fast-acting buyer will have a higher likelihood of making the winning offer. For this reason, it's wise to get prepared financially. Fortunately, there are more tools available than ever before to aid in getting ready. If I'm going to buy a house, I should have I should have talked to lender, pre-approval. And if I see something that I like, I shouldn't wait let's wait another week and go look at 10 other houses. And then, okay, now I want to go back and make an offer on the first one we saw a week ago. What's the problem with that? Especially in the months February, March, April, May, June.
So my sense is if you find the right house, then make an offer on the right house. This idea that that house will still be available after you've seen everything else on the market, that may or may not happen. And particularly with a market in which we have limited inventory, you may have a long wait before you come across something that you love again.
Okay. All right. So we're going to go through local market predictions.
Okay. But before we do that, this is the shameless plug. You need to like the video, subscribe, and hit the notification bell, because that way you'll get more awesome videos with lots of cool charts.
If you don't do all those, the video will pause for you. You won't be able to move forward and see these.
Well, and the elf on the shelf will know.
It'll be bad. It'll be bad. Okay. All right. So here we're going to go through these. Now, this is all online. I'll put a link in the description. You can go through all the cities in here, find the city or area you live. Okay. 3 columns here, the name of the metro area. Sales growth percent. This is not price. This is the number more of sales over the previous year. Okay. Then price growth is the set column. So the interesting one here is Austin. Okay. 14.5% more sales, 10.2% price growth. Austin had a massive run up in 2020, 21, and 22. It kind of fizzled out a little bit, went down a little, but now it looks like it's exploding. Austin's actually like a big tech town. Tesla's there, SpaceX is there. There's like a lot of stuff going on there.
Right. So a lot of things are going on there. So there was a lot of construction, and that, of course, contributed to all this. The thing to keep in mind is that part of this appreciation is also that the people who bought all these new homes and whatnot, they've also had time to improve them as well. So that's part of the reason why you're going to see the appreciation. The other reason you're going to see the appreciation is because, for a while now, Austin has been underbought. So it's going to be coming back, and people are going to want to come back and purchase in Austin. So that whole thing where people didn't buy for a while and now they're coming back, that's going to impact that. We have lots of major cities. So please make sure that you click on the link that Todd posts so that you can see your city.
Yeah. Okay. Here's another one that I found. Miami. Okay. This is Miami, Fort Lauderdale, West Palm Beach area. 24% more sales, 9% price growth. Mm-hmm. Now, remember, this is one of the markets where the crash bros are just like, and it's super high demand still. There's a lot of economic activity. We're going to talk, when we go finish these, we'll talk about economic activity and why some of these forecasts are the way they are. There's still a lot of business happening there, a lot of people moving there. So, okay, the last one that we're going to show you of these is the one with 12.3%. And
wait. Okay, so did you guess in the comments?
Did you guess?
What city? In 5, 4, 3, 2, 1. And the city is?
Las Vegas. Here it is. Down there at the bottom. 5.5% more sales growth. 12.3% price growth was the highest in the nation. I do want to point out one thing. On the previous chart, it had Albuquerque at minus 4.2. It's the only market in the country, you go through this whole thing, where the price growth was negative. So it's estimating prices will decline. And they don't know, right? But I just point that out there. But I thought this was pretty interesting. Las Vegas at 12.3%. Pretty much every market was up. They're the highest forecasts I've seen for the nation have been like 10%.
Okay.
But the lowest I've seen are all 4 or 5.
Mm-hmm.
But that's a pretty safe bet on it because 4 and 5 is pretty much what we've seen the last 2 years.
Mm-hmm.
And that's kind of like we're back to the normal thing after a couple big years of run up.
Right. So 2025 promises to be a busy year in real estate. So if you're interested in buying or selling now or in 2025, feel free to reach out to us and we'd be happy to help you, whether it's us personally or somebody that we work with. We'd love the opportunity to work with you. Remember to like the video, subscribe, notification bell, share the video, leave us your real estate related comments, and we'll see you on the next video.
Bye.
Bye.